Good afternoon and welcome to Estate Living. I'm very pleased today to be sitting with Karl Bishop, who's the head of real estate at Santam. And we're looking at the market at the moment from the perspective of the property developer. Santam's real estate guarantee products are used by many property developers in this industry. And as we move out of COVID lockdown level 4 into level 3 and the construction industry opens up again, we really need to understand how the finances of this industry are viewing the COVID pandemic and how they are looking at future development and investment. Good morning, Karl. Thank you so much for coming through, for being at your house today.
Thank you. It's a pleasure.
So maybe what we can just do is start off with, you can give me a little bit of a roundup of where Santam sits at the moment. And as we go, where have you been during lockdown, the hard lockdown and lockdown level 4? And what is it business as usual for you come Monday?
Absolutely. So with the Santam and the broader Sanlam group, during lockdown, we've tried to be as business as usual and, have our operations running as close to full capacity as possible. And we achieved that to a very large degree. So I think that, the first week or two, as is with many businesses around South Africa, there were some teething problems. But I think as a group, we managed to really get our operation up and running in a very short space of time. We've been, since, the levels coming down to level 4, we do have, a quota of staff who physically need to be in the office. But at least 70% of our staff are actually remote and have been, throughout the lockdown. But, Santam and being an insurance business, we believe we're a relationship business. So keeping contact with our clients, keeping contact with intermediaries, policyholders, and communicating with them has been a huge focus for us during this lockdown, because we want to maintain those relationships, and we also want to be presenting a message to our policyholders and intermediaries as well, that Santam and the Sanlam Group is open for business. And we are here as a financial services partner, particularly during a very difficult situation such as the COVID-19 pandemic. So
as we mentioned earlier, a lot of the banks are looking at the moment, are really looking at the affordability of their home loans that they're offering to end users. Are you, as a financial institute, in a similar position? Are you reviewing development financing that's out there currently?
Right. So let me split it into two. I'll speak a bit more general, and then from a property and real estate development perspective. So in general, as a corporate citizen, Santam has taken a group view that we need to play a part during this time. So our review has been on affordability to clients, but also from an assistance perspective, right? And so, there's been a number of messages out in the media. We've put together a number of relief and premium assistance packages, which roughly total about 200 million rand, which we've now plugged back to our clients and policyholders. So from a affordability perspective, we understand that, our clients and policyholders have felt in certain particular industries, in particular, have really been hit hard by the pandemic and the lockdown. So from that perspective, we've taken the view that we need to be of assistance there, and we've put some cash back into the pockets of our policyholders. To be more down into a more industry perspective around the real estate, yes, we've had to look at from the developments that are out there, from what was happening, and also in particular some of the security that we hold against physical real estate and physical property. we have done a review around that and to what those values are. And, nobody really knows 100% what exactly that discount factor is, because it varies, from property portfolio to property portfolio, from development to development. But in general, we still think that the market is solid. There were pockets and signs of better performing sectors within the real estate environment and less sort of performing, even before COVID-19, and we were well aware of that fact. And so from our perspective, yes, it is important and responsible of us to have done an analysis like that. Maybe something just to add as well, we've spent a lot of time with our reinsurance partners in Europe who've been going through this for a longer period than us here in South Africa. Secondly, we've also spent some time with some of our European clients as well, particularly in the real estate market, trying to understand, what they went through, how it kind of recovered as well, and what that picture looks like right now, to give us a better understanding of what the real estate market potentially could look like in South Africa.
So from your perspective, as you are offering financing or development guarantees to property developers, do you see a growth in development in the coming years, or do you think that because of COVID and then the recession that perhaps the market won't grow as much as you had anticipated?
I suppose that's the billion-dollar question, isn't it, Louise? That everybody kind of wants the answer to.
I was hoping you could give it to me.
Yeah. And maybe if I had that crystal ball, my job may be different. But anyway.
Yeah. So we'd be patching you in on your yacht at the moment, not in your lounge.
Somewhere in the Caribbean by now. So running those scenarios, there are a number of views as to what our macroeconomic recovery may look like and the knock-on effect into the real estate market. So one talks about the V recovery being a sharp drop and a sharp recovery thereafter on the one hand, which then also ranges to the other, which is a more sort of flat and gradually increasing recovery. Our view is what we're calling a bit more of a U shape, sort of a drop in the economy, and then a recovery, but not as sharp, and takes time. Our view is that 2021 will still probably be difficult, maybe not as difficult as 2020, but 2021 will certainly, from our view, be a year of consolidation and review and maybe some slow recovery. With, we believe, from 2022, things now would probably be more stable. Having said that, again, to one of my earlier points, the real estate market is not just one homogeneous market. I mean, there's various sectors within that. And I'll give you an example. So our view potentially is, if you're talking about maybe the market or developments that cover the student accommodation sector, as an example. Now, nobody knows in 5 or 6 years' time what the education or the tertiary education sector may look like and what the effects of COVID-19 is on universities and so on. However, what we do believe is that we know that students going back onto campuses is one of the first moves within the property sector, as an example. As the government has put forward a plan. So these numbers are going to be coming back. The need for that will still be there. So we believe that there may be a quicker recovery within the student accommodation, as an example. If we start talking about maybe potentially the middle market residential or the sort of higher market residential, the recovery there may be a little bit longer. We don't know. We think there would be an effect on price and resale value, right? So what that does for developments, it may slow them down a bit, or maybe they become a bit more affordable. We'd have to see how that plays out. If you're then talking about maybe in the commercial sector, and I'm talking maybe the office environment in particular, the work from home now becomes more of a reality, particularly in some businesses. Do they need as much space as they did before? Do they need as much of a pace of development as they needed before? We don't have 100% answer to that, but we do believe that there would be some change. What is the exact nature of that change? From some of our European counterparts, it has been quite slow. But again, that market is a bit more sophisticated to this South African market from a work perspective, where offices and working from home were a little bit more of an easier thing than here in South Africa. But having said that, I think the point is this. Our view of the real estate market is not just one big holistic market. There are pockets within the market, and we think there's going to be various stages and various levels of recovery within those various pockets within the real estate market.
Have you found that perhaps this has also brought an awareness to new markets within the residential estate? So a larger number of property developers are looking at opportunities within the accessible or affordable markets. There were a niche sort of number of developers that were building large-scale developments between that kind of 500 and 1 million rand mark. We have seen that this market has definitely increased as developers have seen that there are opportunities for development in the space. What is interesting about that is that has land then become more affordable during this time, during the COVID crisis? And is that what's helping propel these new developments? Because some of them are very strategically placed close to metropoles, where one would think the land would have been quite pricey. And so do you have a view on this new growing sector?
Yeah, I think it's a bit of a chicken and egg in my opinion, in that COVID did cause a lull in sales environment, and we've seen that, and also buyer activity and development activity. There's no two ways about that. So that also creates a bit of a false market impression, in my opinion, during that time. But what we have noticed, and what has been successful during the lockdown with some of our clients, those developments that are closer to the potential work, lifestyle, and sort of shopping and recreational activities have performed better. And from a pricing perspective, the buyers were actually looking to be okay with something smaller but closer. Now, would that play out post COVID-19, and to what effect? We're not 100% sure as yet, and so hence, we're going to review that again in the middle of June. But what we do believe is that there's a need for housing in South Africa. That need was there, and that need was growing, and that need, in our view, is going to exist. So what does that lead to? Our view is that there's probably going to still be a strong focus in the more affordable housing, and maybe in the social housing categories where the biggest gaps exist. And a number of developers have also seen that, and a number of developers have experience in that, and so far it's still been okay. On the higher end of the market, from a real estate development perspective, again, within South Africa and geographical location, there are better performing markets and less better performing markets. I think really the point is in even our discussions with some of the financiers of these developers. I think the point is for developers to take away from this is that financial institutions, whichever way they cut it, seem to be saying that we're going to be more discerning with who we lend the money to post COVID-19. Right? And I think that's a very important thing that developers need to keep in mind, is that, the product is going to be looked at in a far more serious, with a more fine-tooth comb. All the property fundamentals themselves have to really, really make sense. And in terms of our interactions, and also with some of the financiers in Europe as well, we're starting to see some sort of recoveries. The funding institutions are, I call it, very, very discerning about who they loan that money to.
Absolutely. So let's roll back and let's look at Santam's standpoint at this point right now. We open our doors on Monday. Lockdown for level 3 comes into effect, which I'm sure there are lots and lots of rules that could potentially change around this, but in essence, the construction industry goes back to work. And which means that boots are on the ground again and current developments. What can you say to your current client base and to developers that were looking to start or looking for financing before COVID and have had sort of some of their plans put on hold? What is the standpoint of Santam, and how are you now viewing these applications?
Yes, it's a very good question to deal with from developers' expectation or client expectation perspective. So one of the points I made earlier is that Santam has been open for business, right? And so we certainly are there to look at developments and look at assisting ways of raising the finance through our various products, and also ensuring these developments. But what is really going to be important is we're taking a very similar stance to the funders themselves. Because remember, in our solution of providing these guarantees to the funders, we're essentially backing that developer 100%, and we're backing that development 100%. So the amount of work now and the amount of analysis and review into the actual project itself will get a lot more deeper and will get a lot more stricter. That's the reality. Not purely driven by us, but you must remember we have a number of reinsurance partners globally who and COVID-19 has impacted the insurance industry immensely around the world. Right, so we have a number of reinsurance partners who also apply a certain level of pressure on us from an underwriting perspective. And so we have to respect that as well. Now, it's whether that changes in a year's time or 2 years' time, we don't know. I always go back to the financial crisis around 2007, 2008. We were there. We saw those effects, and things happened for 2-3 years after that, and then the market kind of picked up again. So I suppose the overall message to clients really is that, number one, an insurer is here to be here during the tougher times. And that's what we're saying we are. That's our role, exactly. Secondly, we also have a different view on these particular products aimed at the property developers, because we do play a level of sort of financial or financier, in the mix. So we've got to understand the projects and from a developer perspective, just as well as any financial institution would want to. Would it be stricter post-COVID-19 for a period? We believe so, yes. But, once I think the general market or whatever business you're in South Africa, once we see how things play out when you get to level 2, level 1, and the economy gets back moving again, and we get to see what growth starts to look like, then we take another assessment of where we need to be.
Yeah. And is that in-depth analysis and further work and research that needs to happen be reflected in the cost structure of taking on a guarantee product?
Absolutely it will, because we must remember our cost and pricing structure from our perspective, let's talk just from a Santam solution perspective, is our cost and pricing is driven by our view of the risk. Okay, and if the risk environment we believe is higher, it's a natural function of that risk that the price potentially will be higher. If we view from an overall perspective, the risk now is more acceptable and lower, it's reflected in the price. That's just a function sort of each other. What we also have to take into account is that the Reserve Bank has maneuvered it as well to get the economy going, reducing the repo rate, so that developments and other businesses, but we're talking particularly property now, would need to start gearing up again. From our perspective as a Santam, our pricing reflects the risk, right? And so our assessment of the risk, should that be higher, then our pricing would reflect that. Should the risk be lower, it would reflect that. And I think from a funding or financier perspective, it's a very similar principle that would be applied. I think what's important to remember is that also the Reserve Bank has played its role to a large degree to try and stimulate and get the economy going, and now we're just focusing on property. So from a developer perspective and an overall feasibility and funding perspective, the cost of money has reduced and will be reduced. Now, does that automatically mean from an insurer's perspective, the overall risk environment has reduced? Not necessarily, right? But we do believe that, there has to be some sort of correlation between the two. But again, our pricing is really driven by our view of a risk assessment at the end of the day. One of the biggest questions right now is what sectors won't we do, or what do we see is probably the most affected? And the very simple and obvious ones kind of stand out. The hospitality industry, not only in South Africa but globally, has taken a huge effect from COVID-19. And how long that would take to recover is a little bit more pessimistic than other parts of the real estate environment. And what are we talking about? Are we talking about maybe the medium-sized hotels, B&Bs, lodges, those types of things? So that sector of the market for us is, we're not saying we won't get involved there, but our risk appetite is greatly reduced within that environment. Going back maybe to the other end of the spectrum, something which I mentioned earlier, our view of the middle market, potentially the affordable housing area, maybe the social housing market, is our risk appetite there would definitely be higher than compared to some other areas of the market. So rolling on from that, and within the broad commercial property environment, maybe the retail element of it, would have, and COVID-19 would definitely have an effect there. However, if shoppers' behavior changes, then there could be a shift into more of an industrial development sort of focus, because now what you're looking at is potentially having products available, warehoused, shipping, logistics, ready to go, for quick delivery to clients now who are shopping online. So those types of developments, in our view, may see, increased activity, and then we would have the necessary or the relevant appetite, for that. So there's still a number of what ifs and ifs to play out, but these are some of the things that we're thinking about from a client perspective.
Prior to COVID, in the last 18 months, we've seen a number of large mega cities, mixed-use environments coming out of the ground, where they've got all of those retail, hotel, sort of commercial, residential spaces. And do you think that mix will still work looking forward, or what is your risk appetite around those types of developments?
I think our risk appetite is still there. However, it's case by case, right? And why do we say that? It depends on the elements of that mixed use. So let's talk for an example. If you've got let's take the example of, you've got residential, you've got some retail, you've got some commercial offices, in that space. What is the mix between those three? I think pre-COVID, the mix would be very different, in our opinion, post-COVID, as an example. Maybe your mix of retail won't be as high, for argument's sake, and also maybe your mix of commercial office space within that mixed-use environment may not be as high. Just taking into the effect, the fact that potentially people may not need as much space to work from, because maybe they're working more remotely. So we don't believe that, the mixed-use developments will disappear. We actually believe quite strongly in them, and that they provide a good sort of risk balance across the various sectors. However, the mix within that sort of live, work, and play environment, we think we would have to take on a case-by-case basis, because we believe that mix would be something that looks different post-COVID-19.
Karl, thank you so much for being with us today. We really appreciate it, and for sharing your insight into this industry. I think from both a developer point of view, to understand the parameters of what and how you're viewing risk in the current climate, and then also at the end of the day, for an end user to know, what spaces and where opportunities lies. And it's quite reassuring to hear that the big financial institutes and the insurance companies, and internationally as well, are still supporting South African development, and that there is still opportunity in our market for future development. Thank you.
My pleasure. Thank you as well.